Mortgage rates are moving lower after ADP reported a very weak jobs report for the month of September. And remember, since the government is shut down and we're not receiving the BLS jobs report that we would normally get, this is acting as the de facto jobs report. And it showed that 3 out of the last 4 months showed job losses. In fact, in September, we saw 32,000 jobs lost, and the market was expecting 50,000 job gains. And the previous report for August, well, that was initially reported at 54,000. It got revised to a negative 3,000. So those Fed members out there saying, oh, the labor market's solid, boy, they look pretty foolish. And those saying that we should cut rates and get ahead of the labor market weakness, they're looking pretty smart. And we saw job losses in small and medium-sized businesses. Large had some gains. But when we look at the sectors, 7 out of the 10 sectors saw job losses. And the one area that showed strength is not market sensitive and where most of the job creations over the last year has been coming from, and that's education and health services. And wages really decelerated on job switchers, people switching jobs. That's a sign of a weak economy because you don't have as much poaching from companies to try to steal talent. Bottom line, after this report, odds of a 25 basis point rate cut on October 29th went up to almost 100%. And on December 10th, an additional 25 basis point odds went to 90%. Let's hope the Fed cuts rates because the market in advance will price these things in and it will help mortgage rates likely to come down.